Hello traders, welcome back to the channel. Today I'm going to talk about what it's like trading funded accounts and why you should trade funded accounts. A lot of people out there are kind of, I wouldn't say against it, but just aren't trading funded accounts, and today I'm going to pretty much go over why it will benefit your trading, why it will benefit your psychology, and overall why it is a perfect route to go down in your trading. Maybe even a next step if you are relatively new to trading, rather than just trying to flip your personal account. This maybe is the way to go for you too. So we're going to start off the video talking about funded accounts versus personal accounts. Personal accounts obviously have full risk on your own capital. If you put $5,000 into a personal account, a live account funded by yourself, you can potentially risk and lose all of that $5,000. You could lose it in one day, you could lose it in one trade. That is just how it works. That is how dangerous trading is when you don't know what you're doing. Whereas with a funded account, once you've passed any losses you actually make, you don't have to pay any losses back. If you lose $5,000 on a funded account, you don't actually lose $5,000. And with a personal account, when it's your own money, a lot of people do really well on demo. They do well on back testing as well, because it's obviously not real money. And when it is actually your personal account, when it's actually real money on the line, money you've maybe worked and saved up for to then put into a trading account, people definitely crumble under the pressure of potentially losing that hard-earned money. Whereas with a funded account, it technically is still a demo account. The challenge verification and even some funded stages are actually just demo accounts still. So they just pay you with profits they make from the failed traders. Because with a funded account, I think it's like a 0.07% actually get payouts from one firm that I saw when they released their statistics. Everyone that fails then pays your profit splits, which is very, very nice. But also people feel pressure on funded accounts. They have to make a certain percentage in a certain time period, and this can obviously put a lot of pressure on their trading, where they have to maybe take setups they wouldn't normally take because they only have 5 days left to trade before the time is up, and they have to trade because they haven't reached the profit target. Whereas if it's your personal account, and if you're up 5%, that's a very, very good month, 5% profit. I know a lot of traders which would kill for 5% a month consistently every single month, and you can just stop trading if it's your personal account. Whereas on the challenge phases for these prop firms, you have to trade and make a certain amount. You have to make 10% or you have to make 8% before you can move on to the next stage to even get a funded account. That is the only downside towards it. Myself personally, because in my personal account it's at a decent size, it means that at the start of every single month I prioritize my personal account, because I know that at the end of the day, any profit is made, I keep 100% of it. There's no profit splits, there's no extra rules. You can pretty much trade freely. Obviously you want to have set rules, but you can trade freely. So I'll trade my personal account at the start of the month, and then as the month goes on, I'll move into funded accounts and then challenges for these prop firms. So moving on to account rules. So a lot of these prop firms actually have their own set rules. Some will be you can't trade news, or you can't even use a certain lot size. And this can obviously be very detrimental to a lot of traders that trade in certain ways. So prop firms aren't really suited to scalpers, in my opinion. They have high spreads, they have high commission, and a lot of them actually have a maximum lot size, because FTMO now has a 50 lot max. So certain positions you might have to enter 2 or 3 times. Maybe you miss your entry and that sort of thing. That can happen, and you can just lose a lot compared to just using one position, one stop loss, one take profit, a lot easier to manage as well. But overall, I'd say having all these rules is a very, very good thing, especially for beginner traders or traders that aren't experienced with trading with large amounts of capital. It is very, very good, because they have to be disciplined. They have to manage their risk. They have to manage their money on the account, or else they'll just violate the rules and the account will be blown. Simple as that. They know they can't lose 5% in a day. Simple. Whereas on your personal account, you could be like, oh, I'm down 5% today, or I'm down 4% today. Let me just enter this trade because I feel like it's going to win. If they keep doing that, your personal account can just go down, down, down. Whereas if it's a funded account, the consequences are a lot higher. You just pretty much just lose the account. Then you have no account to trade with. You have to redo the phase 1, the phase 2, and then fund it again. So it kind of forces people to make set rules in their trading. Obviously you have the prop firm rules, but set rules in their personal trading, so they are holding themselves accountable, so their results hopefully reflect this. And there's certain rules which I personally don't like. A lot of firms actually have it where at a certain time at night, obviously depending on where the prop firm is located, you have that as your maximum balance for the day. So let's say FTMO, I've never had any issues with this, but I had an issue of one firm where they take your equity at that certain time is then the drawdown you're allowed for that day. This could be an issue because let's say you have to close out before a certain time. Let's say you're in drawdown, you don't want to break the rules because of the drawdown, the equity. Or let's say you don't want to hold your trade before news because some firms you're not allowed to close or open trades 2 minutes before or after news. So let's say your trade's about to hit take profit, and you expect the news to push it up to your take profit. You can't do this because you'll violate the rules. Simple as that. This can be an issue for a lot of traders. And I do think these rules are a good thing. It just enforces good risk management, good money management, and overall just keeping your trading nice and regimented. Risking the same amount in every trade, very, very simple. So next we're going to move on to profit splits. And, obviously we talked about personal account, you get 100% of your profits. With a prop firm, I usually only go with firms that have 80% or above. I've seen some that offer like 50, 60%. It's like, I'm not even interested. There's pretty much no point in doing it, in my opinion. So 80, 90% profit splits, very, very good. You make 10 grand, you keep 8 grand. That's pretty decent in my opinion. Especially when you're from the UK, you want to make sure your bank either accepts USD payments or they convert them when they come into your bank. Because I know some people have issues where they can't receive the payments. So they have a USD account and they try and have payments into a pound bank account. It just doesn't work. So either set up a new bank account that actually takes dollars and then just transfer it into your account, or check that your bank actually accepts the currency you're trading in before you take the money out. I had to create a new bank to receive these payments in because the bank I'm with for my day-to-day banking didn't actually accept USD payments in, and it would have a very high conversion fee even if it did. So you kind of got to be careful with this. You don't want to be losing your profits just because of a silly mistake like that. So with the profit splits, what I'd recommend is take a few trades, because a lot of the times now people just try and make as much money as possible. I think it's an issue where prop firms had this leaderboard. So within that month or within that profit split date, it shows you the top 10 traders, let's say. People want to try and get on this. They want to try and be on the top 10 leaderboards to say, oh, I'm on the FTMO leaderboards or I'm on this company's leaderboards. I just think this is very, very dangerous for a lot of traders. The way I personally trade and why I'll probably never be on the leaderboards is with each profit split, I'll make like 3 to 5% and I'll just take my profits. I'll take the profit split. On a decent sized account, you're probably making like 10k, 10 to 20k, even with 5% profit, which is very, very nice. And if you've got multiple funded accounts on a trade copier, you're making so much money. You're making like 40, 50k in a month from making 5% profit. Very, very nice. Obviously, you can push it to make 20, 30, 40% profit. But then once again, you're risking so much more compared to just making a 1 to 3, a 1 to 5, or 3 1 to 2s, or 2 1 to 3s. That's relatively easy to do. Whereas if you'll just keep risking and risking and risking, mistakes can happen, slippage, violation of the rules, anything can go wrong, and you'll just lose all of your profits and won't get a single penny. A lot of people I've seen, maybe DM on Instagram, and I've seen on social media, traders will be up 10k, but then they want 15k, so they'll keep trading, and they'll end up either hitting their max daily loss of minus 5%, or they'll end up pretty much ending the month in drawdown with 0 profits. So they could have waited a week, just as a week, 2 weeks, to get that 10k, money they've never had in their lives before, or push for an extra 5k or an extra 2k, an extra 1k, and lose it all. Happens all the time, and that's why there is such a high failure rate for these sort of Forex funded companies. And a lot of these prop firms are actually bi-weekly now, so you only have to wait 2 weeks for your payouts. Companies that have 30-day payouts are very, very tricky, because let's say you're done within the first week, you then have 3 weeks, if this is your only account, to then just sit back and relax. It sounds fun, but it's not, because you're constantly seeing opportunities, and it's very, very tempting to then just keep entering and entering, because you're seeing the missed opportunities, the missed profits. You're doing it in the maths in your head. If I took this 1 to 5, I would have made an extra 15 grand, that sort of thing. It's very, very dangerous. So bi-weekly payouts, some even do like 7 or 8 day payouts, which is even better. You make your profit, wait like a week, money's in the bank, start trading, rinse and repeat this whole thing. So moving on to the ROI, this is probably the main reason why I trade prop firms. I can flip accounts. I've done it on the channel before. I do it all the time. I'll put a few £100 in, I'll flip it to a few thousand. It's very, very nice. It's very satisfying as well because you're kind of testing your skills. But a lot of traders would prefer to put $500 into an account and flip it to 5k, 10k, rather than putting that $500 into a prop firm to get a $100,000 account. It blows my mind why people try and flip accounts when they don't have, a lot of money behind them, a lot of cash in the bank. If you pass 100k FTMO, I always use the FTMO as the example, I'm not really sure why, but 1% is then $1,000. So 1%, instead of being 200%, you only have to make 1%. Very, very simple. And let's say you make 5% in your first month on a 100k account, you're making $5,000. Whereas if you wanted to make $5,000 profit from a $500 account, you've got to make 1,000%. 1,000% compared to 5%. 995 less percentages. Simple. You'd go for the 5%. It's a lot easier to make. More people can do it. So why aren't people doing it? So the ROI of just putting £500, $500 into a prop firm challenge is so much better than them putting it into a live account to just flip. The likelihood of you blowing an account flip is so much higher. I'd probably say like 90-95% of people blow accounts when they try and flip it. Whereas with a prop firm, if you know what you're doing and you stick to your rules, you can pass. You can pass relatively easily. 8% and 4% on some firms, you can do that. So moving on to the last point, which is patience and discipline. I do think, even myself personally, my trading has improved a hell of a lot since I started trading on prop firms. I've been forced to sit out of the markets once I've made my profit. Once I've reached my profit goal, I just simply stop trading. Simple as that. If you have to abide by set rules to keep your account, this requires discipline and it enforces discipline. If you have to wait a set number of days for a payout, you have to stop trading. This enforces patience. There's obviously a lot more qualities which actually you benefit from trading prop firms, but those are the two main ones, I think. Patience and discipline. Probably one of the top qualities you actually need to have as a Forex trader, because it will stop you taking silly losses. You'll then wait for the perfect setups and make, hopefully, a lot of money. So overall, I think the funded package as a whole, the first stage, second stage, payouts, it's a very, very good business model. The prop firms are making money. The profitable traders are making money. It's a win-win. If they're making money and we're making money, what's not to love there? So if you are considering going for a funded account, instead of just putting it into a live account to flip, definitely go for a prop firm instead. I'm not being paid to say this. I just do think it is free money if you do know how to trade. And I think a lot of traders should implement it into their trading. Even if you just put it onto a trade copier, link to your personal account, you kind of just forget it's there. You just get the profits every month. Very, very nice. So I'll catch you guys in the next video.